Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. As you know, the markets have been very volatile in the last few months, and I think things will probably be the same for a few more weeks. So it will be interesting to see what happens between now and the end of the month. So today is the first day of November. Today the Fed will come out today and give us some hints of what they're planning to do, whether they're going to hold, whether they're going to pause, whether they're going to increase and so on. And then of course the Bank of England will do the same tomorrow, I think. So it'll be interesting to see between now and basically end of the week where things are. But as always, we don't really care basically the macroeconomics. Although it's important to know what's going on, you have to start thinking about your portfolio for the long run. And I would say I'm talking about 10 years from now rather than just like what might happen in the next 10 days. So what I'm going to do today is I'm going to share with you 5 different companies that are undervalued at the moment and potentially might be a good addition to your portfolios if you haven't got them already. And again, I'm not a financial advisor, so as always, do your own research and so on. But before you do anything else, can you please like the video, because it really helps the channel. 50% of you guys that are watching the videos have not subscribed to the channel yet. That will definitely be helpful if you could do that. As well as that, if you can join us on the Patreon account, where you can actually get to the access to the Discord, the Sharia compliant investing books and so on. So there's a lot more things that you can get out of, inshallah, and just try it out for either for £2 or £5, whatever you can, inshallah. What I want to do now is I'm going to share with you these 5 different companies. And as always, if you're interested in any of these companies, please do your own research. The first company we're talking about today is J&J. J&J is one of the biggest companies out there, $357 billion market cap. It has a wide economic moat. They used to have a consumer section of their business. They did a spin-off recently. Now they're focusing on more of the pharmaceutical side of things. Current price is £148 right now, 149 almost. A dividend yield above 3. I've not seen this for a while, so this is really good. Time maybe. Payout ratio is only 44%, so that gives them room to basically increase that if they need to. And the latest increase was just over 5%, and the 5-year growth rate is actually 6%. They've increased this dividend for 60 years, which means that they are a dividend king. So companies that have increased to 50 plus years are called the dividend kings. Dividend aristocrats are 25 years or more. The annual payout is $4.76 and safety 99%. Now, Simply Safe dividend gives 99 ratings. Basically, the highest they give is 99%. Profit margin now 14%, return on equity almost 18%, and return on invested capital 14%. They have a free cash flow over $17 billion, which is quite nice. Total return in the last 10 years, you're looking about 7%, including dividends and price appreciation and all that. Next year, they're expecting the earnings to grow. So 2024, they're expecting the earnings to grow about 8%. Then after that, 5 years every year, 5% every year from there onwards. This is kind of steady Eddie company that grows their revenue. They grow their basically EPS 5 years or more every single year. So okay, which is solid. And Morningstar, okay, it's saying it's about 10% discounted right now. $164 per share is where they think price should be. Maybe one of the reasons that company was down quite a bit recently is because the January 2020 they reported $94.9 billion in terms of revenue. They expecting in December of this year about 84, let's call it about 85, and then after that 87.7. So is they expecting in about 2024, December 2024 to kind of bounce back. So that will be interesting to see. Again, because that is basically slightly this downside here, people will probably start selling this stock, not thinking about the next 5 years to 10 years. And this is why I like to actually add this type of companies when they are here. So when they bounce back, then actually, of course, the price will go up and people will easily forget what was happening before. As you can see here, the actuals actually be heading in the right direction. If you put the estimates, you can see there is a slight difference. So the EPS is $10.06, 10 and 8. And then 10.8 as well. So it's basically in terms of EPS, there's no issues. And we can go to earnings, click estimates, and you can see here, okay, 2023 It's basically almost finished now. 7% after that, 4% after that, again 2.17%, again 3.5%, and so on. So you can see that basically what's happening in the next few years. Similar sort of a thing in terms of the revenue as well. Okay, so that is J&J. The next company we're looking at today is Nestle. We've never spoken about this company before. A lot of you have asked me, so I've got a full video coming up inshallah soon, but I just wanted to add to the basically companies that we're going to talk about today, because it's quite bit discounted right now. $288 billion market cap. I think this is basically based in France, but we're looking at the US version of this company. It has a wide economic moat. Price right now is $109 per share. Dividend yield just close to 3%, and payout ratio just about 60%. Latest increase was 5%, and the 5-year growth rate is 5%. They've increased this dividend for 22 years. The annual payout is $3.19. Safety wise, in 99%, profit margin 10%, return on equity 24%, and return on invested capital 16%. Now they have $7.8 billion dollars of free cash flow right now. Total return in the last 10 years, we're looking at about 6%. Next year, I couldn't find information on that, but growth estimate for the next 5 years, according to Yahoo Finance, is about 8%, and it's discounted right now 21% according to Morningstar. Valuation $131 per share is where they expect the price to be, and as you can see right now, it's $109 per share. As you can see here, year to date is down about 6%. If we go to earnings to have a look at what the analysts expect, 7%, 9%, 6%, 6.5%, 3%, 2.5%, 3%. Again, it's one of those huge companies. They can't grow their fund basically that quickly. And of course, they have a wide, diversified portfolio of products, and they're very much worldwide. So I would not, it's a great company, but right now I'm going to do a little bit more digging to find out the types of products and so on. So I will be doing a full video, inshallah, coming up. But right now, it looks like it's about 21% discounted right now. The next company that we're looking at today is another one that we have not spoken about, is Zoetis. And this company has a market cap of $72 billion. They sell healthcare products for animals. Okay, so they are in the animal healthcare side of things. 72 billion market cap. It has a wide economic moat. Price right now is $153 per share. Dividend yield just below 1%, and the payout ratio is only 28%. So they have a room to improve that dividend if they need to. Latest increase was 15%, and the 25% in the 5-year growth rate, which is absolutely huge. It must be one of the biggest that I have seen for quite some time. So that's really interesting. On the dividend growth streak of basically 9 years, and annual payout is $1.50. Safety 74%, profit margin 27% or so. Return on equity, we're looking at about 48%, which is absolutely huge. And return on invested capital about 19%, which is again really good. Free cash flow right now just above $1 billion. Total return in the last 10 years about 18%. Next year, they're expecting the earnings to grow about 12%. Growth estimate for the next 5 years is about 11%. 8% discounted right now. $170 per share is where the price should be. I'm actually going to do a little bit more research about this company. It seems very interesting. They do have some excellent free cash flow here. The growth side of things, it looks really good. It's discounted right now, and the dividend side of it is absolutely fine. And of course, the fact that they actually have the animal, I'm going to look at that whole sector and see what other companies are out there that have that sell the animal healthcare side of things, and see how they compare to this company, because it seems interesting. If they're the industry leader in that sector, then it will be very interesting maybe to add to this portfolio, because that's the type of business I really like. So it will be interesting to see how this company compares to their peers, inshallah. Now looking at the earnings side of things, if we click the estimates, and 11%, 12%, almost 12%, and so on. In terms of looking at the revenue side of it, 6%, 7%, or 7.5%, 7.5%, again 4%, and so on. So it seems very interesting from that side of things. If we look at the revenue growth, okay, you can see it's heading the right direction, and annualized you can see also is heading the right direction. And right now, as you can see, in terms of rating side of it, okay, Seeking Alpha is saying it's a buy, Wall Street says a buy, Quant is basically saying it's about 3 right now, so it's a hold right now. So yeah, another interesting company we haven't spoken about I haven't spoken about this in this channel for a long time. Right, the next company we're looking at is one that I own in my portfolio. Cummins and three basically have a $30 billion market cap, so it's not actually a huge company. It has a narrow economic mode, $216 per share right now, dividend yield of over 3%, which is really nice. Payout ratio only 33%. Latest increase was 7%, and the 5-year growth rate is 7%. 17 years of increase in that dividend. $6.72 per share is what per share is what you will get for every share that of this company that you own. 98% safety, profit margin about 8%, return on equity 26%, and return on invested capital about 16%. They have just over $1 billion of free cash flow right now. Total return in the last 10 years 7.5%. Next year they basically think this 2024 they think the earnings will decline about 1%. After that, 11% growth, 11.5% for every year after that. It's about 16% right now discounted, or 17% discounted. $253 per share is where they think the price should be. Right now, it's about $216 per share. So in terms of earnings expectations, like this year, they're saying, okay, this is basically where they think that the company will end. Next year, you can see that 1% decline, and then after that, about 13% after that. So it kind of basically averages it out, 18%, minus 1%, and then almost to 4% after that, 2025. So just going back here in terms of revenue, in terms of their growth in the last few years, as you can see here, okay, it was heading the right direction, and it's still heading the right direction. So but then 2024 there's a slight decline, if you can see there. And if we change this to annualized, you can also see it's more or less the same. That's that decline that we've just seen. Right, the final company we're talking about today, Albemarle. This company has a $15 billion market cap. It has a narrow economic mode. $110 per share, $120 per share is where it's at right now. This company has come down a lot. In fact, I want to see how far this company has come down, because it's absolutely ridiculous. I think at one point in the last whatever years it's been trading, 2022 it was $325 per share. That's absolutely crazy. $335, almost $35 per share is where it was. Right now, we're looking at about $120. That's very interesting. Dividend yield 1.26, and payout ratio right now 5%. Latest increase about 1.3. They might as well get rid of it. The 5-year growth rate of 4%. Dividend growth rate is 28 years. That's probably why they want to increase it, because they are dividend aristocrat. Annual payout $1.60, and safety 99%, profit margin 40%, return on equity 50%, return on invested capital about 29%. Free cash flow right now we're looking about just less than $1 billion. Total return in the last 10 years we're looking at about 8%. Next year they're expecting the earnings to decline about 18%, and then after that about 13% growth every single year. 191% discounted right now. $350 per share is where the price should be. I do own this company in the family portfolio. I actually bought more of this company today. The reason is because they actually reported, I think they reported the earnings today, but I haven't seen it here, which is very interesting. Normally they add it. So let me actually go in earnings here. I think they should have been reported. Yeah, they should be reporting today. Okay, so they're reporting this evening then. That will be interesting to see. That's probably why it's down quite a bit. Maybe I just bought it too early. To be honest with you, I really like the company. I like the product model, and I'm going to keep that in the family portfolio for a long run anyway. So, and I don't own a lot of it, so it's quite small shares in there. So let me go back here. Just a couple of more things in terms of earnings moving forward based on the estimates. Okay, we're looking about minus 18% this year, then 20%, minus 21%, 10%, 21%, also 20%, and so on. And then there's a massive jump. Apparently, this one person thinks then the earnings should jump in 2027. It should be 220% jump. Okay, that will be interesting. 40%, of course, this year. Then there's a decline coming up. It will be interesting to see what the company says today. But yeah, so there you have it. That's the 5 companies I wanted to talk about. The news just came through. The Fed basically said they're gonna keep the rate as it is for a second straight meeting. So they've met again today, and they've just said we're gonna keep as things up, the things how things are. So this might change now. Okay, things might either go red or green depending on what the people think about this anyway. So there you have it. That's the 5 companies I want to talk about today in terms of Sharia compliance side of things. there you have it. You can pause the video and have a look at it. There's no issues with that. Have a wonderful day. If you have not joined us on Patreon, please do so. Like the video, subscribe to the channel. Let me know if you have any questions. Have a wonderful day. Assalamu Alaikum.